They said Ontario's real estate would never fall, that it was untouchable, the safest investment in Canada. But now, the dream is cracking. Across Ontario, homes are sitting empty, listings are piling up, and the million-dollar home dream is turning into a nightmare. Buyers are gone, interest rates are brutal, and sellers are panicking. In this video, we're counting down 5 Ontario towns where the housing market isn't just slowing, it's on the edge of collapse. If you own property, rent, or plan to invest, what you hear today could save you from losing tens of thousands of dollars. And at the end, I'll tell you what you can do right now to protect yourself before the crash gets worse. Ready? Let's count down the 5 towns from the least to the most vulnerable. Number 5. London, Ontario. Once seen as Ontario's hidden gem, London offered peace, affordability, and a growing economy. But that's changing fast. During the pandemic, prices doubled in just 2 years as buyers fled Toronto looking for space. Investors flooded in, Airbnb hosts bought entire blocks, and locals were priced out. But now, the boom is over, and the correction has begun. The average detached home that once sold for $820,000 now struggles to hit $650,000. Sellers are cutting prices, and buyers aren't biting. New developments are sitting half-built. Experts warn London could see another 10 to 15% price drop if rates stay high into 2026. Why? Because wages haven't kept up with prices. A 2-income household earning $90,000 a year simply can't afford a $700,000 home at 7% interest. It's not about demand anymore, it's about survival. Number 4. Windsor, Ontario. Windsor was once a real estate underdog, cheap homes, border economy, and a growing auto sector. But the hype got out of hand. Between 2020 and 2022, Windsor saw one of the fastest price increases in all of Canada, over 80%. Investors from Toronto and Vancouver poured in, buying homes sight unseen. Now, with interest rates up and job growth flat, the market's turning ugly. Vacancy rates are climbing, and landlords are slashing rents just to fill units. Many new buyers are realizing they paid far above real value. Some are already underwater, owing more than their home is worth. Windsor's local economy is too tied to automotive manufacturing, which is facing layoffs and electric transition pains. That means less income stability and more forced sales ahead. If the US economy slows down too, Windsor could become one of the first markets to crash hard. Number 3. Kitchener-Waterloo. The tech boom made Kitchener-Waterloo one of Ontario's hottest markets. Startups, students, innovation, the Silicon Valley of Canada. But when the tech bubble popped, housing followed. Big layoffs hit Google, Shopify, and dozens of startups. Suddenly, the same people bidding $200,000 over asking vanished overnight. The average home price has dropped 22% since its peak. Developers are freezing new condo projects. Office space is sitting empty, and investors who banked on tech-driven rent growth are quietly selling before things get worse. The biggest issue: the market is over-leveraged. Too many people bought with minimal down payments, hoping appreciation would bail them out. But appreciation is gone. And with high-interest renewals coming, thousands could face mortgage distress in 2025 to 26. This might just be the beginning of Ontario's tech town collapse. Number 8. Oshawa, Ontario. Oshawa was Toronto's overflow valve. When GTA buyers were priced out, they came here pushing small homes into million-dollar territory. But now, the same migration trend is reversing. With hybrid work fading and commuting back in full swing, buyers don't want to live an hour from Toronto anymore. Demand is drying up. The average detached home that once went for $1.2 million is now closer to $900,000 and still dropping. Some neighborhoods have seen price drops over 30% since 2022. The market's frozen, according to local agents. Buyers are waiting, sellers are desperate. And the city has heavy reliance on the Toronto ripple effect means if GTA crashes, Oshawa will feel it twice as hard. The bottom might not even be here yet. Number 1. Brampton, Ontario. And finally, Brampton, the poster child of Canada's housing boom, and potentially its biggest bust. Brampton's rise was meteoric, fueled by immigration, investor speculation, and historically cheap loans. Between 2017 and 2022, average prices nearly doubled. Everyone believed Brampton never loses. But today, reality is setting in. Incomes haven't kept up. Mortgage renewals are hitting hard, and some homeowners are facing $1,000 plus monthly payment increases. Banks are reporting more delinquencies and forced sales in Brampton than almost anywhere else in Ontario. And when investors bail, prices fall fast. Some neighborhoods are already down 35% from their peak, and analysts predict another dip if rates don't ease by mid-2026. Brampton's market was built on credit, and when credit tightens, the bubble pops, ending so. Those are the 5 Ontario towns standing on shaky ground. But here's the truth. This isn't just about those cities. It's a warning. The same patterns over leverage, investor speculation, and unrealistic pricing are spreading across the province. If rates stay high, Ontario's housing dream could turn into a province-wide correction. So before you buy or invest, do your homework. Real estate doesn't always go up, and sometimes the smartest move is waiting for the crash to finish. And if you want to stay ahead of the market, subscribe now, because we break down the truth behind every major housing shift across Canada.